Hello and welcome to Crypto Weeklies. In this video, we analyze Ethereum from quantitative and qualitative purposes. None of the content is financial advice. Let's get started. In terms of the recent price action for ETH, the price is still about $2,500 level. This is a key level to watch. Anything below $2,400 would be slightly a cause of concern, because that would mean price is close to that 21-week exponential moving average and 20-week simple moving average, both at around $2,350 level. On the other hand, if Ether manages to go and break out to the upside from this $2,900 level, $2,900 level, that's where the 0.618 fib, sorry, 0.5 fib is at $2,900. Also, this ascending trend line since about July 2022. If you look at some of the major support levels were at this line, I would imagine that in the first attempt, this line should offer some area of resistance. Again, none of the content is financial advice. To conclude with this technical analysis, the key levels again to the upside are the $2,900, to the downside are $2,400.50. Going forward to the current machine learning based evaluation for ETH, this is the quantitative side evaluation. In the next 6 months, if there is a bull case for ETH, price action could be between the $2,700 level and $4,200 level, slightly higher than the triple tops that ETH enjoyed in 2024 at around $3,900, roughly speaking, close to that 4K level. These are the weekly average prices. But if you look at the candles, they had this the wicks going up to that 4K level. This is the $4,080 ETH at that 0.786 level from the previous all-time high that ETH had back in 2021 at around $4,900. So this time around, again, these key levels to watch are at around 4K. That is the 1 standard deviation machine learning based price forecast for ETH in the next 6 months. Going to that in that non-euphoria case in the crypto market, that could be a ceiling for ETH in the next 6 months. If there is a euphoria in the market, the 2 standard deviation case for ETH is between $2,900, kind of coinciding with that 0.5 fib level, and all the way through to about $6,200 level. The $6,200 ETH is again somewhere at a midpoint between this 1 fib level and 1.618 at around $7,500, between 5K and 7.5K. Roughly speaking, 6,200 would be a midpoint. If we go further, that is the blow off top scenario, the 3 standard deviation bull case, the 99.7 percentile confidence that the ceiling could be between the ranges of this red line between $3,100 and $8,600. $8,600 ETH in this area, again a midpoint between the 1.618 and 2.618 fib level. On the other hand, if we look at the fair value for ETH at this point, for the polynomial regression based analysis, fair value, again a nonlinear model with which is adjusted to the fair value in the bear market and the fair value in the bull market to account for this sine wave kind of a function of a fair value. Again, right now ETH is in an upswing per this regression model. The fair value is at around $3,800. If it were to go to 1 standard deviation residual applied to the fair value to this yellow line, which again is the entry point for the euphoria phase. For this model, euphoria phase starts at around $6,200, again above the 2 standard deviation forecast per the machine learning model, and the 1 standard deviation forecast, again they are having some confluence at that $6,200 level. That could be a key area of interest for ETH's price in the future. Again, in terms of qualitative narratives for ETH, the best estimation is how much of the attention span ETH is enjoying on this word cloud. This is 7-day worth of activity in the crypto market, especially in the along the social media platforms such as YouTube and X, which are the popular narrative right now. Bitcoin is still holding the keys in terms of narratives. Bitcoin and the bullish sentiment and the altcoin narratives are gaining popularity. ETH again right now is after this last week where ETH was at the center stage on this narrative word cloud. the ETH has taken a backseat. Again, there are a lot of bearish narratives as well at this point in the market. You can check it out. Again, this narratives do get reflected in price at one point. Again, you can see the market cap has declined over the course of the last 7 or 8 days from the market cap perspective. Again, this was slightly a dip from 22nd of May, when the market cap was about 3.2 trillion. Now it's lower than that. Again, 3.2 trillion has been an area to look for. Again, apart from that, from that December 2024 highs for the crypto market, which topped at around 3.75. This 3.5 has acted as a significant area of resistance all the way through. So looking at another indicator, the seasonality, again, it's still favoring Bitcoin. Again, that means we are still in the Bitcoin bull run. That means ETH still is taking a backstage. In terms of the ETH BTC level, though, a key area looking at this valuation has been reached. This is the ETH divided by BTC pair. You can see there was a major support at this 2017 bottom that ETH visited in 2025, almost 6 years later. Now the pair has risen to that 20-week simple moving average and the 21-minute exponential moving average. If there is an upside over here, or if there is a double bottom over here, that could signal in the shorter term a slightly bearish outlook for ETH. If it were to have slightly higher high, still in terms of Bitcoin ETH valuation in the coming weeks, it could still suffer a little before breaking out to the upside. That is one potential scenario, like it did back in August and September 2019, and then after reaching that bottom kind of where it was in around September 2023 over here, we might be similar place, again slightly higher low from this perspective, and then double testing it in again December time period. So that is something to look for in terms of Bitcoin ETH valuation. Again, that could reflect back in ETH USD valuation as well to some extent. If we were to look at some of the DCA models or dollar cost average models, this is price color coded with respect to risk levels for DCA purposes. Whenever the risk is, again, personally speaking, again, I'm not financial advice, whenever the risk is less than 20%, especially for ETH, that is again a decent time to DCA. Right now the risk is at around 16%. Again, to identify major bottoms getting less than 10% or between 0 and 0.1 risk, that's where major bottoms occur. Again, in April 2025, the risks were at around 9%, and we did make several videos related to ETH on this channel. Again, this is the homepage of the YouTube channel. You can see over the last month or so, a lot of Bitcoin and ETH related videos, especially related to ETH. Over the last 2 weeks and 7 days, again, a lot of videos were covered on this channel. If you are interested in this, tracking the performance of ETH through the remainder of the bull market, you can check this channel, give us a like and subscribe, and also check out these charts on cryptoweeklies.com, link on the bottom of your screen. They are available for free for all. You don't have to pay or sign up for anything, and also not have to watch any ads. So the opposite is, again, everything is derived from this regression function. Especially this regression function has identified when the price of ETH starts getting overheated between that 40% and 50% risk, that is between 0.4 and 0.5 risk. If that kind of price action were to materialize, right now the risk levels are less than 20%, but if they were to go to that 40%, the price of ETH per this model could be at that point at around $4,850, kind of close to that previous all-time high of ETH at around 4,900 level. Between that level and roughly speaking $5,500 level, slightly above that, could be the price action for ETH in case that it were to revisit that triple top. Similar risk to that triple top. Again, prices would be slightly different, although the risk would be essentially one and the same. That is because the regression function has matured from $2,000 now to at around $3,800. So the distance between the price and the regression function in a proportional and time adjusted fashion is accounted for in this regression based price risk model that we have, not just for ETH but top 100 cryptos, most of the top 100 cryptos by market cap on cryptoweeklies.com. So these models update every day. This model says that if the ETH were to break out to that highest risk level between 0.8 and 1, that is between 80% and 100% risk, price of ETH could be somewhere around 8,000 and 9,750. So close to that 10k level, slightly shy of the 10k level. That is what is estimated by this model. Again, we have several models to identify several different risk-based outcomes. The simple moving average, the 20-week simple moving average based guidance again helps identify the shorter term dip buying opportunities, identifying them again. There are some false positives, especially during the first half of the bear market, that is in for example in 2018 or 2022. Again, this was a slightly a false positive, but still from that point in time, from 2400, ETH did go to $3,500 again. That was not a rally which was by any stretch of imagination a small rally. This model did identify the April bottom as well, when the risk was per the 20-week simple moving average price with relationship with the 20-week simple moving average coming at around less than 10% risk. Right now, per this model, the risks are kind of elevated. Again, there is no surprise risk as at around 40%. If they were to go to that, for this model, the 20-week simple moving average model, the risk at around 50 to 80% or 0.5 to 0.8 risk. That's where most of the action occurs. If price were to go to that level, per this model, the prices could stall between $3,500 and about $4,200, kind of close to that ETH's 0.618 level and the 786 level slightly above that. That is what is forecasted in the next 20 weeks by this 20-week moving simple moving average based model. In terms of ETH's risk in terms of time weighted average price model, this model also helped identify a bottom in April of 2025 when the price was lower than the blue line, which is the time weighted average price. This price identifies especially for high quality assets where has the cool off happened, how far can the cool off go, where the price is lower than the time weighted average price, which represents the time spent at some of the key price levels are baked into what price can ETH potentially digest in the future downturns. Is the price to look for is at around $1,500 level at this point in time. Again, this is a growing function. Back in 2022, this blue line was at around $1,000. Now 4 years later, ETH per this model has a capacity to digest at around $1,500 price based on the time it has spent above that blue line and at various price points. So just to summarize with this model again, April 2025 bottom below the 1500 level was quite significant. Right now the risk levels are at around 44%. They are not as elevated as they were in this yellow zone. If you were to look at that yellow zone, again, price at that level, at risk at that level was at around between slightly under 70%. If it were to go to that 70% level, per this model, the prices could be at around 4k, slightly above 4k, because back then, back in March till December of 2024, the time weighted average price was at around $1,200. Now it's at around $1,500. So have to account for that $300. So around $4,300. That's where the ceiling for ETH at a similar risk level compared to March 2024 could be for this model. All in all, as a confluence of several models, the estimated bull run target for ETH is at around $8,200 or close to that $8,300, where the price is very close to that, slightly above that 1.618, but not quite close to that 2.618 level. That is what the machine learning model, the risk-based models help identify at this point in time, with a weighted risk of about 30% and a reward of about 3.25x from the current price of about $2,500 level. And with that, I'd like to conclude the video. Hope you enjoyed the content. Before I let you go, this is one model for ETH and Bitcoin together, where the price risk is normalized with respect to the 20-week moving average, helps identify where we are in terms of the rally. And if ETH has taken center stage, not quite, ETH risk is at around 40%, Bitcoin risk is at around 52% again. That means Bitcoin is rallying more than ETH at this phase of the market cycle. But as the bull market matures, ETH does eventually take a center stage, like it did back in August 2020. Also, during May 2021, where there was a major rally in the crypto market, where again there was a slightly higher high for Bitcoin and ETH in November. But you can see at those phases where ETH outshines Bitcoin, that's where major peaks occur in the wider crypto market. We are not in that phase, at least haven't been in that phase since about 2021. Now you can see there was a brief time in 2024 where ETH was rallying slightly more per this risk-based model, once in January and then in May of 2024, but that was very short-lived, and the risks were nowhere close to that 60% or a higher risk, 80% or higher risk for ETH. The highest risk since November 2021 that ETH has been is at around 72% or 0.72, and for Bitcoin the highest it went on its risk pair was at around 80%. So nowhere close to that 100, between that 80% and 100% risk band. Bitcoin barely touched it, ETH hasn't touched it yet. So this is how the proportional and time adjusted risk for ETH and Bitcoin are. These kind of analysis are available on cryptoweeklies.com. Again, last but not the least is how is Bitcoin and ETH performing. This is Bitcoin's performance in 2025 from the yearly open, up by about 15%, whereas ETH, I believe, is still down by about 23% from the yearly open. They are correlated assets, so you can see whenever Bitcoin goes up, it has gone up, but ever so slightly. Whenever Bitcoin corrects, ETH corrects a lot. That has been the trend since about 2021. So the last 4 years it has been quite one and the same. In terms of the overall bull market completion, it's completed at around 36%. This is again calculated by the top 100 cryptos, how they are doing on their risk journey, using metrics such as alpha, beta, volatility, risk adjusted returns, and percent drawdown. At the highest that this market cycle the risk went was in December 2024, where the risks were higher than 60%. Now they cooled off to almost at 20% in April, less than 20% in April. Now back in May, at this rally, the risk levels are still in this green zone. These are charts are in increments of 20%. So green zone is between 20% and 40% risk. Blue is anything less than 20% risk. Yellow is between 40 and 60. Orange is above 60. So orange indicates high risk in the market. We haven't seen that since about early December of 2024. So looking forward to those heightened risk levels. If they occur, that's when the distribution in the market should ideally start. Again, not financial advice. These are some of the recent news sentiments over the last 24 hours in the market. Again, most of the narratives are bullish. Overall sentiment is at around 58% using the social sentiment. And last but not the least, as we covered earlier, these are some of the popular narratives. The all-time high related narrative for Bitcoin, Ether narratives taking a backstage, some of the other altcoins garnering some attention. The performance of the last 24 hours, again, still ETH. If you look at the last 30 days, it's the number 2 rallying crypto. Over the last 90 days, most of the cryptos are either flat or down, with a couple of exceptions. ETH slightly lower than its past 90 days rally. Again, Bitcoin is somewhere over here, up by about 19%. ETH is right flat at around 1.85% up from the last 90 days. And with that, I'd like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.